Hi fellow traders, I'm making this video to share my trading plan and analysis of EUR/USD. Before I proceed to explain all the things that I took into account for this analysis, I would like to tell you that I have already taken my sell position as soon as the price just went beyond the low of this previous candle. The low of this previous candle was 21.18.5, and I had set my sell stop at 21.17.5, which has just been executed. And if you're watching the video and price is very near to my entry point, you can also take the sell position. Now let's discuss about why I took this sell position. If we just zoom out this chart, then we'll see that EUR/USD has been uptrending. If you look at this whole move to the upside, so it has been making swings like upswing, then downward retracement, upswing, downward retracement, then upswing. So basically it has been making higher highs and higher lows, and we need this tendency to be broken for a bearish context. So this tendency was already broken as soon as this low was broken by the price. So something around here, this previous low was broken, then price accelerated to the downside, and then it retraced to the upside. And when it started continuing to the downside again, here was a sell opportunity as well, and then price moved to the downside, and then this is the retracement, and then again the continuation, and this again is the sell opportunity, and I have taken my sell position already. So this is the one factor which I have taken into account for sell position. Another thing is the development of 3 drive, and there is a huge chance that this 3 drive is going to be completed, where this is first drive, this is second drive, and this is going to be the final and third drive. And if we calculate the length of last drive as per the calculation method of 3 drive, then we should look at the retracement, because every drive in a 3 drive pattern is either 127.2% or 161.8% extension of its previous retracement. So let's look at the previous retracement before the development of second drive. This was 161.8%. This is the 161.8% horizontal level of extension of this previous drive. Price came around here, consolidated for few hours, and then returned back to the upside. So obviously this was quite in line with the mathematical calculation of 3 drive development. And if we plot the same, we plot the extension 161.8% of last drive, then this will come here, this horizontal line, 161.8%. so this 1.1996, roughly 1.20, is the completion point of 3 drive. So this is a very significant area. Another way of finding the target to the downside is to look at the single ABCD. If we do not consider this 3 drive, then we can simply look at the entire ABCD, bigger ABCD, where this will be the AB, and this whole move will be the CD, and then this will be AB equals CD, and AB equals CD is also giving us very similar target, 1.2025. So there is no huge difference between these two price levels. One is 1996, another one is 2002, so there is a difference of only 6 pips. So obviously this is a support cluster made by the bigger ABCD and the 3 drive. So this can be the final target of my sell position, which I have taken right now. But before I go for the final target, I have a shorter target as well, because there are some PMIs on Friday which can affect the movement of EUR/USD. PMIs from European Union are going to be released, including the PMIs from Germany and France. So I want to close my position before Friday. So I will look at the smaller picture, for which I will consider just the recent development, where this will be my recent development, and this will be the recent ABCD, and the nearest target of this recent ABCD, I'm not considering the previous movement, just movement from this price area, so from here to here, and this retracement and this development. And then I'll plot Fibonacci extension as per this movement from here. This is the point where I'll connect, and this is the another point where I'll connect. So and I'll just make it default. Okay, 61.8% of this ABCD, where 61.8% of this length is considered, and this is the nearest target. So this is 2141. So I have set I've decided to exit half of the position at 1.2040 plus 1 pip plus 1 pip is a spread. So obviously this is a sell position, so we have to exit at the ask price. So we have to add the spread to this price, because the price shown on the chart is a bid price. So 2141 or 42 is the target, but I still have taken my target 2-3 pips nearer, because I don't want to miss the target, and there is chance that the price can be slightly different from my broker's price, because interbank price and prices of other brokers are different. So I always keep my target 2-3 pips less than the actual target shown on the chart. So my target is 1.2043 to 1.2043, which is just 2-3 pips above this 61.8. So this is where I am going to exit half of the position, and 1.20 is where I'm going to exit the rest half of the position. So this is the first target, and this cluster made by AB equals CDO and 161.8%, that was the completion point of 3 times, is the final target. So that's all about the target. Now let's talk about where to exit the position if trade goes against, if market goes against our trade. So if it will start going to the upside, then I will exit my position if a 4-hour candle will close above this price. So I'll wait for a closing of the 4-hour candle rather than placing any stop loss. So that's all about my SL and TP. And if we compare the SL and TP, my SL is around 30 pips. Even if 4-hour candle will close 5-10 pips above this, maybe 40 pips will be my risk, and the reward is almost 75 minus 3 pips to be precise, so 72 pips in first target, and almost 113 pips in the second target. So my reward is quite bigger than my risk, so this trade is looking really good. And there is one more factor that I have seen on 4-hour time frame that supports our idea of sell position, and that is hidden bearish divergence. If we look at recent movement, look at this slope, price made lower high, whereas MACD predictor at the same time made higher high, and this usually happens because of deeper retracement. So this movement to the upside was a deeper retracement, which is why MACD made a higher high, but this is a sign that the market can continue in the same direction. So this is a hidden bearish divergence. So these things are supporting our sell trade. So that's all about this trade. Thank you for watching. If you want to comment and watching this video on YouTube, I apologize for the inconvenience. We have disabled the comments on YouTube, but there is a facility of commenting on our website. So you can go to Forex analysis page of our website. All the videos are embedded there. So basically videos are embedded there, and the purpose of making video is nothing but to embed in the website. So you can go there, you can sign up for free using your Facebook or Google account, and there you can comment. So Forex analysis page of our website keonconsultancy.com is where you have to sign up for free using your Google or Facebook account, and you can comment there. That's all. Thank you for watching.